Hello, everyone. Welcome to I Learn How. This is Vincent, your mentor. Today, I have a very special lesson where we will talk about the top five mistakes beginners make when they start trading. This is the stuff that nobody tells you, and today we'll learn about it firsthand from me. So, these are actually simple mistakes that you think you won't make. You know, easy to make mistakes, something that logically you shouldn't be doing, but however you end up finding yourself in those shoes. So without wasting time, I'm gonna get into it so we can start learning about doing these mistakes. And if you actually take this serious and write it down and note yourself, or be aware of yourself making these mistakes, you can actually save yourself blowing multiple accounts. We all know, we've been there, we've made these mistakes. That's why we know about it. So I'm going to get into it and talk about each mistake as we go. So the first mistake that I always see most of us getting into is wrong position sizes. I mean, you can have a 95% winning strategy and you win, for example, 9 trades in a row, and you only one trade, you lose one trade and blow the whole account because you over leverage, you over exposed your account in a way that if you have a big move against you, then you have a big chance of blowing your account after winning for 9 times in a row on only one loss, and you find yourself out of the trade and then having to fund your account again. So what you do, you must have a set position size for every asset that you trade. Either you're trading the Bitcoin, the Euro US dollar, or you're trading the US 30, US 100. Find out the right position size. You find that you opened a one lot while you have a very small account, you will quickly blow. So you must learn to actually use small positions at the beginning so that you only really win less than 1%. So you get to understand your method, you get to understand your strategy, how it works. So have a set position for every asset that you trade, and the position must also be so small that even after taking a loss, you don't have you don't risk your account. You ideally you want to risk about 4%, 3%. I say when you're starting, risk 1% of your account. That is about it. Don't even jump more than 1%, and that's how you're gonna survive. Because then with 1% mean that you can take 99 trades without actually losing your entire account. So after 99 trades, there's no way you can lose all 99 trades. You have to win some. And that's where the secret lies. You need to stay consistent. You need to protect your money. And therefore, you must always make sure that you have the right position size. So my advice is you keep the same position size for at least 3 months or more and use it and get used to it. And when you're confident about your strategy, you can start to increase. So my advice to start increasing position size is after your account is actually doubled or trebled, then you can now start to double your position size because now you're trading with the profits. And then from there on, you can now go 3 times and then so on and so on. So the second one, taking profits too soon. And this happens to a lot. This is psychological because we grow up with the fear of losing. So immediately once we start seeing the money, we get excited and we take out the profits, the small profits that we see before they actually hit our target. So most of the time we don't even have a target. We just want to see profits. And when we see them, we get excited. Oh man, I made $5. Oh, I made $10. Oh, I'm closing. and then you close the market, keep going in your direction, and you realize that I should have waited. I could have made even $100 if I waited. So you just lost a good opportunity where you're supposed to make money. So remember, you're not going to win on a trade. So when it's time for you to make money, capitalize on that and then make sure that you do get some profits. So what you do, you let your profits run, you win more on the long run. Because with the 50% strategy, winning strategy, what you do have is that you can lose 5 trades and win 5. So if you let your wins, let's say you're risking 1%. So out of $10, you are risking $1, and then you stand to win $3 or $5 if you win. So you get to see that on the long run you make money because you're only losing $1. Next time when you win 5 times that or 4 times that dollar. You win $4. So which when all the results compound at the end of the month, you find that you actually doubled or tripled your account. So know when you take the profits and know where you put your stop loss before you open a trade, and stick to it no matter what. That's what professionals do. So the other thing is poor risk management. I mean, people, they allow too much loss in the hope that the trade will reverse and go in the direction. And it barely happens, because when the market starts moving and then trending in one direction, it takes a while before it changes that direction. We all know by the time that the market reverses, your account will be gone, especially if you're over risking. But if maybe you were risking 1%, or you are having a smaller position size, it's likely that the market can reverse and find you while still in the trade. That is possible. That is actually a very likely scenario, but because of over leveraging, most people, if the trade goes too far, you find that you're already losing half of your whole investment, half of your whole capital in one trade, and then you give up. It's psychological. You start to give up, or you start moving your stop loss, or you remove stop loss altogether, so that psychologically you start to lose hope. So poor risk management is really the heart of why people actually lose, especially when they're still new in the market. So it's easy to give up, it's easy to lose hope when you are in the loss, especially when there are big rates. So what you do, you have a stop loss and a take profit before opening a trade. I think I'm also repeating this one. And you let your stop loss be hit. When your stop loss is being hit, it only tells you one thing, that maybe you were wrong. Actually, not maybe. It tells you that you are wrong. Your trading setup is invalidated. So therefore, you want to stay out of the trade. All right? And what people do after taking a loss, what do? They re-enter trades after taking a loss. You just lost. The best thing that you can do is to stay back and analyze why you lost. So in that way, next time you won't be making the same mistakes. So what people do, they revenge trade. They double their position size. They increase the position size to 5 times what they had before, so that they can regain their losses. And even though at some point this might work, or it might have worked for you, but it won't last, because there'll be a point where you will actually start losing even more, because the trade maybe is going against you. Remember, when you enter a trade, it doesn't mean that you know for sure 100% that you're gonna win. So we enter with a probability. So there's a probability, maybe 80% chance that you might win, or 60% or 50% chance, depending on the strategy that you use. But no strategy is foolproof. Therefore, you enter knowing that there is a high chance, there is a chance that you will lose. So you must have a risk management in place, knowing that, okay, I'm entering this trade, this is how much I'm willing to lose in this trade only. So you stick to your risk management on your trading plan, analyze your losing trades to understand what you missed so that next time you can do better. Many people have no trading plan, they have no channel. They only have a strategy that, okay, if I see a pin bar there, if it hits the resistance, I buy. If it's at support, the resistance I sell, support I buy, like that. And then, but they don't have a plan of this is how much I'm going to risk, and then this is how I'm going to set my stop loss and my take profit, and this is how much I'm gonna make. My risk to reward will be this much. They don't have that plan. And then also when they're taking trades, they don't have a journal where they actually jot down the trades so that they can learn from their mistakes, or they can actually learn from their profits, where they profit the most and where they lost the most. So you don't have a direction, you just trade directionless. And you trade many strategies. You trade the pin bar, or okay, I trade support and resistance, or I trade trend lines. Oh no, I saw this one, I trade the shooting star. So many things that you can actually use. You trade in moving averages or moving average cross. So many strategies. All those strategies, they work, but you can't use them at the same time. You will definitely struggle, especially if you're not a pro. So you better just choose one strategy and follow it. So when you don't write things down, it's very likely that you won't learn from your past mistakes. So you will keep repeating the same losing behavior over and over. That also means that you'll be losing the money. So you also will learn what kind of trader you are, if you're a swing trader or you're a scalp trader. So your nature will tell you that, okay, you like to take profits very quickly. You want to wait out. How do you feel after you waiting for the trade? And do you feel like you want to close it very soon? And are you comfortable waiting? So in that way, there's people who are patient, people who are impatient. And most of the people who are impatient, they're scalp traders. They like to take trades and get out very quickly. That satisfies them. So you must know what kind of trader, so you know your nature, and so you can follow that strategy. Your strategy aligns with your nature. Remember, when you're a swing trader, you take trades on a low and on a higher time frame, and when you're a scalp trader, you take trades on your short time frame. Like you look at the 1 hour as your high time frame, and your 15 minutes and 5 minutes as the time frame that you trade. Whereas swing traders, they can look at daily as their high time frame, weekly as their high time frame, and then go down to 4 hours and 1 hour to take trades. So this is the nature of different traders. I actually have now the six bonus mistake that you guys I've noticed that you make and then regret it afterwards. There's like, you have no target for the day or no trading time. People will stay in the charts the whole day trading. They don't have a target how much they want to make for the day before they actually retire and go and do something else. Remember, you can't be trading the whole time. You will have analysis paralysis. You must have a fresh mind when you're looking at the charts, so they can be able to spot setups. Or else, if you stay the whole day looking at the chart, you end up seeing things that are not even there. That happens to a lot of us. We all know it. So have a trading time, like maybe you say from 2 p.m. to 5 p.m. This is my trading time. Maybe 30 minutes before 2 p.m. you look at the charts, you analyze, you see where the market is going, see the sentiment, and go look at the fundamentals. Is there any news that are coming? Do you expect that anything that is going to move the market? What's really going on? Visit one of the websites, CNBC, for example. and check what's going on. Check Forex Factory. There's many of those sites that have news about trading, about the markets, what's going on. So then you follow that, and then you position yourself to trade properly during that time frame of 2 p.m. to 5 p.m. So you follow the set of rules no matter what. So whenever it's now after 5, you are closing your trade. No matter if you were actually running at a loss, you didn't actually make profit for the day, it's time for you to close. The same way as if you made your money, it's time for you to close. So if you didn't hit the target, you'll hit it the next day. So be consistent in doing that, and make sure that you will always be there the next day with an account that has money. Because if you stay on the charts the whole day, you are likely to only trade for one day. So that's all I have for you today, guys. If you like this content, please like, subscribe, and leave me a comment at the comments section below. And I actually need your support, guys. This is a new platform that I just started, and it's not so long ago. It will be very good to leave me a question if there is more that you want to learn, or there's topics that you want me to cover. For now, that is all I have to say. Bye bye.